So yeah, if we want to move into these, it's a pair of Marcus and Millichap's videos. From the first is from John Seabury,
friend of the show,
and the next is from another friend of the show, John Shang, and they both regularly have great information. I think that it's interesting. There's an informal law of headlines that says any headline that ends in a question mark can be answered by the word no. Well, with apologies to that law's author, the answer to this John Seabury video is an emphatic yes. Right out the gate, John Seabury describes investors being very, very aggressive in pursuing multifamily deals because now is the time to buy. And he says, the approach to the market for these buyers has to be finding a strategy, which is, you always got to have a strategy. But it means finding a target cap rate and understanding exactly where interest rates are. And he's kind of arguing for the viability, in some cases, of negative leverage. And he's invoking, the potential for forcing...
Don't be too afraid of it. He's like, listen to us, and he's like, hey, no, it can work sometimes, which is true. Yeah. And again, that was my point earlier, Matt. It's like it is nuanced.
Yeah.
But it also should be highlighted that there is more risk when you go negative leverage. You are counting on additional things needing to happen in your business plan to achieve what should be a higher return than one that uses positive leverage.
Yeah. And he does say establish your criteria. He notes, maybe cap rates will be 5.5 or 6, probably not going to be 7 in today's market. Although, as we have maybe said, if you look at cap rates as commensurate with interest rate changes, maybe it should be a 7, but it ain't going to be right.
But Matt, do you feel, and this is the broader point that I wanted to ask you about, do you feel like there is a push? I guess I've noticed a push recently for brokerage houses coming on, really needing to put some support out there and maintaining a narrative. And they're publishing the vast majority of like the pieces and research that comes out in the industry, right? There's definitely a narrative to get buyers re-engaged and to come into the market.
Yeah.
And on one hand, we can take it at face value, saying, okay, the guys that are selling the apartments are telling us now's the time to buy the apartments. Maybe they know something and they're smart. They're close to the market. They make some decent points. But they also, it almost seems a little desperate.
Okay, so that's kind of what I was getting at when I was saying it's kind of my feelings.
Like, why would they need to do it? Why would they need to say you need to come back into the market?
And when I first saw this video that John Seabury put out, he talked about buyers being very aggressive in this market, But if you look at the numbers that he is citing, and if you're aware of your own experience, maybe as an investor or a syndicator, that's going to be different than a broker's perspective, first of all. And second of all, if you just dig into the numbers a little bit, you may be you may come off with a different idea that people are jumping into the market.
I guess whereas the long term, here's what makes sense for me, where it's a good time to buy right now. This would be my argument.
Yeah.
Okay, it's like make a case it's a good time to buy. We're seeing values that are coming in close or below replacement costs. Yeah. So there's some good basis opportunities to buy high quality projects in good locations. And again, at good relative values to what it would take to build them. That sounds attractive. The returns, though, are rough.
Yeah.
They're not commiserate with what you would want to receive in compensation for the perceived risk, going on in the market. Now, but now where you could be smart for taking on the basis right now is we have bottomed out. If prices start going up and if this is a huge, just recovery, and in all is good, that would make sense. But I don't see there's enough short-term headwinds, like short as in a year, where it's hard to get so excited of now is the time, because it feels like we still have to get through some stuff before we can be that confident. But that being said, is it?
That's what
the fear and the uncertainty. Everyone's running away. Now it's time to get in.
And that's what, watching this video, and I shared it with other people from Great Capital, and I said, this scares me a little because were we way off? Like, that was what I was scared of. Our cautiousness in the market, was that unjustified? And I returned to the numbers and I looked at things again, and I was like, no, I think that we're still justified in holding off, or at least Or at least being more careful now and not being as aggressive as he describes it. But I do think that,
that's what I want you to be. They're saying you need to be aggressive. They're not like they're saying you basically need to go out there on a limb because it's like we want to buy stuff. It's not like where we've gone out and said, stop looking at deals. We are not buying anything pencils down. It's like we're trying to make the numbers work, and we're just like it looks like garbage, and people are saying get aggressive with it. Go just do it anyway. And I'm like, the numbers don't work, the math doesn't work, and you're just saying just get in there.
So that was I do agree though, if it does meet your criteria, you better jump on that quick, because there's not a whole lot that is on the market.
And the criteria, and that's the reading between the lines, is that if your criteria is like, clip a small coupon and I don't need a big return and I have to diversify into commercial real estate because I'm a large institution, that makes sense. And like if I had $1 billion of cash, I would probably buy some multifamily right now. Yeah. Because now, do you buy the $1 billion of multifamily or do you sit in treasuries making 5% and buy in 6 months from now? That's the question. Yeah. And I think that you'd look for opportunities, and there's really two philosophies. Do you dollar cost average in, or do you wait, try to time it a little bit, which never really works out that well. But basically say you're going to wait until X occurs. We're going to begin in Q1 of 24 or Q2 of 24 because we believe X. And if it hasn't bottomed by then it's not going to bottom, and we're off to the races. I wouldn't go all in right now. I think dollar cost averaging, going slow right now, like still finding some opportunities. But man, I'd want the big war chest. I'd want to have the $1 billion in cash for like early next year. I think isn't that the way we should look at it? Like, okay, you have got to, because it's all theoretical. If we're like, it's now the time to buy, it's like, I don't know. But if you have the money, if it's real, what would you do with it right now? And that was my Powerball plan, by the way. If I won that Powerball, or less, man, the biggest investor. That would be great. You get a title change.
Oh man. But anyways, I do think that this is what I kind of come back to.
Should buy everybody lottery tickets.
Well, I mean, let's get aggressive about that.
Get a little pool going.
Get aggressive about the lottery.